moving towards the topic of technology, do you think that technology can help gain that trust again? Or do you think the opposite, that it's actually that human side of things, that's human side in accountancy or audit that helps bring that trust?
To what extent does technology bring trust? Because, we're having this debate about technology can deliver something, and it's the value of the profession that goes on top of that. So I don't know to what extent technology can increase trust. I guess it's going to increase things like transparency, the accessibility of the data, be that in practice or audit, and whether that itself is the means in the end to drive trust.
Sometimes there's been a naive belief that technology does, can be totally reliable, but we're hearing more and more about that. It really depends whether there's some sort of bias accidentally built into it. So it's not kind of simple as that. It's an amalgamation of the two, isn't it? Technology should, if used properly, be a tool for the auditor or for the accountant, the tax advisor. They're basically sitting there on the margins, the interface between the end customer and technology to do the interpretation. So technology has its place. If it's done correctly, it frees people up. And we're having a little chat just now off camera about the fact that really, if you look all through our working life, technology has been repositioning where we have come, where we as individuals work. And really in the last 5 years, that are coming into quite sharp focus, and that we are kind of, a lot of compliance activity now is being dealt with by technology. Has that led to kind of a reduction in the number of accountants around? No, I think it's actually probably led to an increase, because we're focusing on the added value side. Technology on its own doesn't improve trust. It's a combination of man and machine, isn't it?
I guess it's one of the things is that it has the opportunity to give you more transparency and justification for and the rationale for the decisions or recommendations that have been made. However, there's two things to that. One, you've got to have trust in the technology and the results that the technology is bringing. So who is, essentially auditing the technology? That's only going to get harder. So if we talk about kind of technology today, we think about AI and automation, this wonderful new world. At the moment, there's not a huge amount of real AI out there. There's just a lot of very fast rule processing. And that is it is very easy for somebody to audit, which is, here's a set of rules that govern a decision. Has that been mapped properly into this piece of technology? I'll check the inputs, I'll check the outputs. And when we think about the application of artificial intelligence for these jobs, for crunching data for us, by virtue of the fact that if you can express something as rules, it is just that. It is rules. It doesn't require artificial intelligence.
No.
If it requires some kind of magic judgment, that is artificial intelligence. And by virtue of that, that happens inside a closed black box. And you cannot peer inside a piece of AI and understand truly why it's making its decisions, in the same way that we can't lift up our heads, take a look at our brains and understand why we're making these decisions.
So is there much real AI in there? And if there is there much in, say, audit or in tax?
So machine learning is a strand of artificial intelligence. And machine learning is basically, you will train a system with a set of inputs, and it will look at those inputs, and it will try and deduce for itself what the rules are governing the inputs and the outputs.
It'll amend what you say. It'll amend the algorithms or whatever.
Absolutely.
That's the bit,
and that's what machine learning's doing. But it's doing it with a huge amount of data and coming up with a very, very complex means to make the decision, which, for machine learning to be truly of value, it should be beyond our ability to understand how it's making the decision. Because otherwise you are just using a piece of software to help you to create a decision tree quicker. And that's not true machine learning. So how on earth do we get to this point where we trust a black box to make decisions when we don't fully understand how it's made the decisions? And you may well disagree with it, but what happens when it's right and you're wrong?
Yes. And I think the interesting thing is, if we think about where a lot of accountants will be involved, which I mentioned SMEs and small managed businesses and entrepreneurial business. Actually, if you're interacting with the business owners and the business growers there, they may want some help in the decision, and they may say, well, what do you think? Say what you think. But they can say to you, why do you think that? What is it about your experience and knowledge that says that's what your decision, and you can illustrate? Well, unless I'm missing something, the machine is not yet at the position where it can say, this is the reason why I've learned from all over the data I've looked at why that is the right thing to do.
Mm-hmm.
You can, and they can ask you, and you can scenario, and you can say, in my experience, I've seen this, I've seen others do something similar.
Yes.
There is something about this human bit of interaction,
Yes.
the questioning, the responding, which I find quite difficult to see in for the entrepreneurial businesses, the SMEs, that bit is going to be replaced anytime soon.
Mm-hmm.
I'm sure
Mm-hmm.
the knowledge we can get from technology that allows us as the advisors to have greater insight and to perhaps arm the business owner with some more information with which they want to make the decision. But do you see that human interaction piece?
Yes. Yeah, I absolutely understand where you're coming from. And this is where, so I'm a very passionate technologist. There aren't enough superlatives in the world to talk about how much I love technology. But I'm also a rational thinker and think with a business hat on. My point is when people say, oh, technology could never do this. My kind of standard point is, well, they can drive cars, and you need to understand just how cognitively complex it is to drive a car on an archaic road system. Yes. It's a tough thing. So if a computer can do that, most of the problems that we face are going to be achievable for that machine to deliver. But then it comes down to the business case and why you would do it. Because you wouldn't build a very complicated piece of technology to solve one problem once, because the business case wouldn't stack up for it. You're going to go after that 80%, which is how can we build a piece of technology that can very quickly solve and apply machine learning to solve the 80% of the problems. And the 20% that's left over, which is the stuff that's complicated, requires real insight, expertise, whatever it may be, the stuff that you just wouldn't see the business case for building technology for, that's the stuff that's going to be left over for the advisors. And I imagine in Audit, it would be the ingesting millions of data points from a global organisation, and my God, you want the computer to do that for you. You want it to do all that work over there. Let them do that, and the bit that's left over where it goes, this looks odd, but I don't know why. That's the bit where you can come along, use your experience, your insight, to take a look at that, come at the conclusions, make your recommendations to clients. And that's the same in practice as well. I find that quite exciting. That's the appeal of technology. It's always pushing us to improve and do things better, more efficiently. But I think it's the question there, particularly when I think about the application of artificial intelligence, machine learning, and this technology in practice, particularly in SME, where I'm quite interested in. So we've got 25% of clients who don't have accountants, 50% who are using accountants for compliance work, 25% who are using accountants for advisory work. Yeah. And you look at the role of technology, and it's that middle 50% where you can see actually it's not that far away that technology is going to be able to deliver the same service that an accountant who is just delivering compliance is going to be able to. Whether the consumer is ready for that or not, whether it comes down to the individual business owner, whether they'll put their faith in a computer or whether they'd rather have somebody to say, I've done your compliance and I'll sign a piece of paper for you. But the number of people who are only willing to trust an accountant is going to diminish over time as the next generation of business owners come along who are comfortable with technology, and not only with that, they're probably more comfortable with technology than they are with people when it comes to cynicism and the reputation and the ability to do things correctly. I think a lot of people coming through these days would have greater faith in an automated bookkeeping system than paying somebody minimum wage to sit there and hack away their transactions.
It's interesting. So we've talked about the word trust. I mean, the word scepticism is of course high on the agenda for auditors. And I was just thinking, yes, you trust in person or the machine? Who are you more sceptical about? The professional advisor with X years experience who's been recommended to you, or actually someone said, look, actually you don't need them. Here's the technology solution. And are we sceptical about that, or are we willing to trust? Hey, computer says yes, must be fine.
Yes.
So I think it's an interesting. That's an interesting area to consider as to where do we put our trust and how do we retain our scepticism, which is important.
And I think the guiding light should be it's, I like to distill these things into rules, and you think, right, if you sit in a profession, let's just assume that people, clients are only ever going to trust the machines more and more and more. So let's just state that is a given. So then you've got to think, as a professional, as an advisor, where do you sit in this new world where more and more faith is put in the machine? And then you've then got to figure out, what is it that you're going to be famous for? We spoke about this earlier with audit. So how do you move audit away from being a compliance product into somebody who's then providing tangible insights to audit committees? And it should be the same for accountants in practice as well, is that the technology is doing all that heavy lifting, and then the accountant is then saying, right, that's done all that for you. Yeah. Now I'm going to provide my insight for you to help you to achieve your goals.
Well, technology has been more and more releasing people from the mundane to focus on what we used to call added value, isn't it? Sort of aspect. And that's part of the challenge for the audit profession is kind of building that added value side. This isn't still, we said it, or I said it on, it's not once and done. There will be ongoing sort of challenges, but we keep moving up the sort of the value curve.
And that's going to start impacting into tax as well, of course, isn't it? Because when we've seen the digitisation of tax, we real-time reporting on payroll came in some time ago. Yeah. We're looking at making tax digital.
My favourite subject.
Well, so we talk about technology affecting the audit business in other areas. I mean, how do you see that impacting actually the role of what you might call the tax professional going forward?
I mean, I see it's going to impact very heavily. If we're going to talk about making tax digital, that was announced as by HMRC in 2015. At the time, a lot of professionals were absolutely horrified by the thought. And then, around about 2017, I'm talking to room full of accountants, and you say, this is because we're starting to get more of an understanding of what it really would look like. And you're listening to some say, how do you operate your practice? Oh, we do this, we use bank streaming, we use receipt bank, we produce quarterly reports for our clients. So, do you know what? You're already working in that way. So really, we are already on that journey as accountants. The ones coming in now, or certainly 5 years on from here, will look back and say, "What? You used to do it like that. This is the way to go forward." So we are right on the edge of a major change in tax. Again, back down to freeing people up from the mundane, from dealing with the compliance, to more or less, working on the added value side. And it's that bit you mentioned earlier on about real time that will make the difference in the profession.
Yeah, absolutely. I think we're probably one of the few firms that got very excited when the MTD white paper came out. We were practically skipping down the corridors of our office because it was such, it was a visionary piece of work. And to talk what's in it, it was fantastic because it kind of gave us validation because we run a technology company and an accountancy firm, and we said, wouldn't it be great if ... And a lot of these things came out in the white paper, so much excitement, and then over time that has just got beaten away, predominantly by the profession saying, actually, I don't think we can do this. It's not realistic. Think about the customers, and then you think about MTD for VAT, the bridging. There's this thing where. To allow that where actually you can carry on using your Excel spreadsheets because we'll do this thing in the middle. And it's like, come on, let's embrace what it means to be part of a society that's got a modern digital taxation system. And the value to the client is that real-time aspect. And that's the core of what we've done for a long time.
And it's interesting because you just said something, or your little story you were telling there reminded me when I was talking to accountants. I used to run accountancy practice for 25 years. And do you know what? Gave me a good living, nice staff, didn't really like my fire. And then when I talk about MTD, I say this to people, I realised what it was. I didn't really enjoy it, but accountancy. Accountancy was all about, for most of us, was compliance. It was rear view. It was looking back at last year. You were sitting in front of a client about 6-7 months after the end of the financial year. You couldn't tell them anything about that year. They probably didn't already know. It was too late to affect that year, possibly too late to affect most of the next year. You were then telling them what their tax liability was going to be in January. And if they hadn't listened to you properly and the profits increased, they had the double whammy of an increased payment on account at the same time. You watch the colour drain from their face and you give give them the bill. Is that really, is that where you want to be?
Yeah.
MTD moves you, or not MTD, it's about cloud-based computing, it's about where you are now, puts you in a position where you can actually be dealing with stuff in more or less real time. The compliance bit drops out the bottom.
Yes.
And you can tell people things at a time when they can increase their profitability within the year. Do you know what? If they pay a bit more tax, it's only because they've made more money. And isn't that a better place to be? And that's where the professions go.
Yes. It strikes me as the conversation we're having earlier about audit and driving up the reputation and changing people's perceptions of what to expect from professional advisors. It comes back to the question of who is it who's going to educate our clients to help them understand that an accountant and auditor can offer far more than just this compliance. And they're not just that person who comes 6 months after the end of the year and says, sorry about that, but well done.
Yeah.
But then, so it might be an education, but then we've also got to look at ourselves, haven't we, and how we approach life, and how do people really see that advisor relationship, which is the step-by-step looking forward, as I like your expression of using the rear view mirror, that we can get sucked into the rear view mirror, because actually so much of still what we do, whether it's in audit, whatever, is based on historic financial information.
Yes.
I mean, just the nature of the name of that, historic. I mean, it doesn't give this real-time view. I mean, it is interesting, isn't it, whether auditors in the future, I'm sure it's happening in some places now, but actually you're plugged into a real-time link to client systems.
That's my next question.
And you're
real-time audit a thing,
spotting the anomalies as they happen and reporting it. It's not a thing for us at the moment.
Yeah.
I certainly think it's got to be on the radar. You just think, well, how could life be in the future?
Yeah.
And rather than these audits taking place in this block, 1, 2, 4 months after the year end, where you're doing all that historic.
Yeah.
But is it going to be the ability that you are linked in somehow permanently to your clients' data feeds?
Absolutely.
And you set up things to the anomalies come through. Hang on, who posted the journal at 3 a.m. in the morning or whatever?
Right. So on a smaller and slightly different scale. So again, we look at our practice and we have a very clear technical roadmap for the next 5 years. And we've got kind of 3 core things that we're doing, and one of them is the mantra of everything real time. So at the moment, I think traditional firms probably do that much work at the year end. We probably do that much today, and we want to get it down to about that much, and more happening as those events occur throughout the year. So things like the anomaly detection, so that's exactly the kind of stuff that we're looking at the moment. Is that why would you wait till the end of the year plus X months to address that issue, when if you've got the systems in place, you can, that event can happen, and as an accountant in practice, you can take a look at it and pick up your phone to your client and say, hey, this is interesting, let's talk about it. Maybe good news or bad news, it could be either way. And I guess as an auditor, it could be the same thing. So something happens.
Breaking bad
and you've
news
got that opportunity.
Breaking bad news at an earlier time is better than a later date when you're saying,
Absolutely.
But what you're talking about there is exactly, a guy used a bit about saying it just drops out the bottom. So if you get your in-year stuff right, then fundamentally your end-of-year stuff does literally just drop out the bottom.
Absolutely.
Yes. So you're just shifting to a point where you're giving forward-looking advice at a time when it is valuable. Therefore, hopefully your clients will get to love you much more. And all that dry stuff where you're telling them that they already, because clients have their own metrics for knowing what's going on.
Yes.
And actually, they might be a fag packet, but they're actually quite accurate at what they're doing. So if you can move it to that bit, you're saying, look, I see an anomaly just about to come over the hill, or it has broken on you, but you can take some action now. Isn't that a much better place to be?
Absolutely. In our journey on this, we kind of realise actually, so as a firm, we've got a team of accountants, and at the end of the day, they're the people at the end of the year who are going to prepare those accounts, put their name on it, and give it to the client and say, I have faith in these numbers, I trust these numbers, I've done a good job. So much so, I'm going to stake my professional reputation on it. And we're in this interesting position as being this kind of software company inside our own company. And what we need to do is surface data to our internal team of accountants in such a way that they can put almost blind trust in that data. So they need to have confidence in the machine and the system So each time they're doing a set of accounts or preparing some year-end paperwork, they don't find themselves doing check upon check upon check of a system that has already done those checks. So this comes back to the thing about trust. So how can it be that, be it if you're using our software or somebody's sitting there using Xero, Free Agent, whatever the platform is that if that has done some piece of automatic work for you, how can it be that accountants in practice can have faith in that and trust it without then basically bring up Excel and doing the whole calculation by hand and so on and so forth? Because we're certainly not going to win in terms of the efficiency stakes if that's the case, because a check upon check upon check isn't an indication of a quality system. A quality system is getting it right in the first place and being confident that is correct. And that's a big human challenge that we've got to get over, is how can you deliver data to people in such a way that they can be confident in it and trust it.
And that's probably working as on an exceptions basis. You're always you don't worry about you talk about 80-20 in a different way earlier on, but it's back to you don't focus on the 80% that's right.
Yes.
You just learn to kind of know when something isn't right.
Yes, absolutely. Yes, and that's the kind of thing we talk about, which is, in building these systems, it's either got to be very confident that it's correct or put its hands up and say, I don't know.
Yeah,
right. There is no place for a computer system to guess and say, this looks about right to me.
Yeah. No, you're quite right. I remember, in the early days of having an office, if someone said to me, "Oh, I think that's about right," then my antenna went straight up. Yes. So you're just talking the machine equivalent, really.
Yes, absolutely. You're absolutely right. Yes. Instead, you want to say it is right because this, and this. Thank you very much. Yeah. Something I hear time and time again at discussions and panel shows is, okay, I'm here. I'm partnering in practice. I'm hearing what you're saying. But how on earth do I get there? There's all this great technology out there, but as a partner in practice, I don't quite understand it, let alone trying to figure out how I confidently advise my clients on this. But there's a very good chance there's people in your practice who do. And how can you start to engage other people in your firms and start to talk to them about what their ideas are for technology and changing service expectations? Because if there's somebody sat in your office in their mid-20s, there's a good chance that they're going to represent your customers' attitudes in the next few years.
Yeah.
On this last note, thank you so much for joining me today here at the Accountancy Age panel debate, and I hope you enjoyed taking part of it.
Thank you.